So if you clicked on this video, you're probably interested in Monday.com and whether the massive crash in share price following their recent results actually warrants a decent investment opportunity at the moment. I had some spare time, so I decided to go through Monday.com. Really interesting company, and they've been on my radar for a while. They are a project management collaboration tool that basically helps enhance productivity and organization within businesses. Now, what's really interesting about this is these types of companies, they often have two of the most powerful competitive advantages. Number one, switching costs, and number two, the network effect. Economic moat is Warren Buffett's term, but one of the pioneers at Morningstar, the research firm where their kind of USP was around analyzing economic moats, was Pat Dorsey. Pat Dorsey, I read his book, The Little Book That Builds Wealth, when I was younger, and that was one of the first investment books I read. And since then, he branched off and made his own asset management firm, which manages over $100 million in assets, so we can track what he bought and sold at the end of the quarter. What's quite interesting is a couple of years ago, Pat Dorsey's, one of his largest holdings, despite only being about a $5 billion company at the time, was a company called Smartsheet. Now you'll see from Dataroma, it says Smartsheet old. Basically, Smartsheet got acquired. But it's interesting because Pat Dorsey was really one of those pioneers of this whole analysis around economic moats and what can give a business a durable competitive advantage over the long term, right? And Smartsheet is a very similar work collaboration tool to Monday.com, suggesting that if Pat Dorsey found a lot of value in Smartsheet's moat, it is suggesting that something like Monday has similar kind of properties. And as I mentioned, these two are switching costs and also network effect. So Monday.com has sort of like a per user, per month model, where you've got a lot of different users all working together on large projects, and they're also moving up to going after enterprises, right? So on the enterprise side, they're doing very well and going up market towards there. Now, of course, once you've got hundreds or in some cases thousands of employees in your company all using and collaborating on the same system with the types of data that is stored in that system, and also Monday allows a heavy degree of customization. So actually tools that you have built for yourself on Monday.com. Imagine the effort and the pain it would take to migrate elsewhere, right? And then there's also a network effect. You imagine you've got this big collaborative tool. The more people that are on Monday.com, the more boards you've got, the more automation you've got, the more that benefits the existing platform. So you've got two really powerful competitive advantages going on there. And I quite like this type of business. I think that in a world where the office culture is never going to quite return to 2019 levels, it's obviously higher than what it was in 2021, 2022, but I never think it will actually return all the way back up to 2019 levels. People are much more agile. A lot of people have hybrid schedules now, and this kind of tool, Monday.com, when so much is on cloud, so much is online, and not everyone is always in the office all the time. Of course, even before work from home, you've got people taking holidays at different times. It's just very useful to have a clear, centralized platform showing exactly what you're working on. So I think there's quite a lot of value here. What's interesting is Monday.com shares crash massively, and I've been through the report, and I cannot find anything that warrants a 30% drop down to the valuation that they've currently got. Q3 revenue outlook came in line with expectations. Profitability is a little bit lower due to higher costs. Monday.com are aggressively investing in their platform at the moment, both on a sales and marketing side and also on the research and development to propel their new AI features, which I'm going to show you. Long-term software model uncertainty. Potentially, but this is the beauty of it, is that Monday.com are investing in AI for low, no-code solutions for a highly customizable software suite, which is exactly what people need, right? Because often, at least earlier on in SaaS, when SaaS was very new, a company would sort of write a solution and that would be it. And there would be very small iterations and improvement. And over time, that led to a disconnect between the evolving customer needs and the software company. If that software company got a little bit slack, excuse the pun, got a little bit lazy in terms of actually improving its product to the point where it's fulfilling novel customer demand. However, with Monday.com, customers can actually build their own tools and apps, and they can also build them through a low no-code solution that's very intuitive that Monday.com designed themselves. It's interesting, I'm not entirely sure why the stock market gave Monday such a drop. But Monday.com stock has a history of doing this. Is actually a great opportunity because it has a history of crashing a lot. At the same time, it has a history of recovering very well. So if you look at Monday.com since the late 2022 lows, it's actually broadly followed the NASDAQ and the S&P, but you would have these massive crashes and then these surges upwards afterwards, which again, if the past is any indication, that may happen again in the future. Down at $185 a share, Monday.com is looking very, very cheap. Their last quarterly revenue was 26.6%, and they're forecasting 26.3% for the full year. Again, they didn't change their full year guidance. They didn't upgrade their guidance in the last quarter. They literally just narrowed the ranges. So that's really, really good growth. You can see, like 26.6, it took a little bit of a hit in the last quarter, but other than that, it's been really steady between 30 and 35% over the past couple of years. Monday.com also have very, very good optimized free cash flow margins. And if you look now at their forward price free cash flow, it's at just 27.5. So way, way lower than the normal range of about 35 to 55 that it's been over the past couple of years. And that's not taking into account the egregious valuations it had when it went public. If you look at it on a price to sales basis, again, if we take into account when they went public in 2021, because they're one of those companies that went public in 2021 at like 60 times sales or something, and then raised a whole load of money, that normalized, and you can see now that it looks quite cheap. But if we take out that IPO phase, they're actually trading at 7 times forward sales. And that historic range is usually about 9 to 13 in the midpoint. So if they get back up to a normalized price to sales of 10, that's pretty good. That's a pretty good return. What are we talking? 30, 40, 45% return if they can get up to a price to sales of 10 or 11. Really, really steady revenue growth. This is quarterly revenue growth. As I said, they were up just shy of 27% year on year. So you've got a lot of positives here. As I said, you've got the economic moats there. You've got the really good sustained growth, and their target is also to go up to those large enterprises. Switching costs and network effect are much more pronounced in these large enterprises because you've got more people. So you've got more people used to using that particular software, and the more people you've got, the more it benefits additional users, and the more you've already got embedded into that platform. So the more use you're actually going to get from the network effect, because somebody new will join it and then they'll be like, wow, all of this software infrastructure is already in place to help my department's productivity. So that's really, really good. They're moving up enterprise. I think that maybe the market gets scared a little bit because you can see here, this is the growth in number of users by the size of the contract value. And you can see in purple, this is 10 plus users. So their land is starting to slow down, only growing 8% last quarter. However, they're deliberately going up towards the enterprises. As I said, that will give them a wider economic moat. It will allow them to continue to bring down their sales and marketing as a percentage of revenue over time, which is also great. And you've got really sustained growth rates. I mean, what is this? Orange, 100K, 45.9% year-on-year growth in 100K plus in ARR customers. Another thing to note as well is that this is not necessarily an issue. The number of users on Monday.com is still growing, but of course, users doesn't necessarily resemble customers. A customer would be the enterprise or a department of the enterprise. Monday.com doesn't publish total users number. Instead, they disclose overall customer counts and cohort metrics. So all this means is Monday's land on the small side is the growth in that is slowing down, which is part of Monday.com's plan. But that's just talking about the number of businesses or overall customers. It's not talking about the number of users, which are obviously within a customer cohort. The last thing I wanted to mention is, okay, so you've got a software as a service. What is the risk with regards to AI? What is the risk that someone with the most powerful AI can come along and basically replace the company? There's a bit of a hedge against that because of the amount of people integrated into this company. If it was like one person using a really advanced piece of software, I think that that's more AI disrupted, but the fact you've got everyone sort of using it together and there's collaborative tools actually built in that are already customizable, that gives it a bit of a hedge against AI. But Monday.com have been really proactive about integrating their own AI solutions into their platform already. They've got 2 really good co-founders that are very on it on that. So have a look.
My team is working on something huge called Monday Magic, and it will change the way you build work solutions. Here's the idea. You describe what your business needs, and Monday Magic instantly builds the full solution for you. Not a template, not a suggestion, a real functional work solution. Now, let's jump into Monday Magic and see how it works. I'm going to ask it to create a solution for managing event planning with the ability to see an overview of all upcoming events, manage tasks and assignments for each event, and create a form for collecting RSVPs. Now, this right here is where the magic happens. We have different boards, dashboards, forms, AI-powered columns, all connected to each other. You can modify anything on this solution by simply asking for changes. You can see Monday Magic quickly understands the request and makes the changes for me. I like what I see, so I'm going to go ahead and click Create Solution. Okay, perfect. Looks like it's finished. And that's it. We have here a real functional solution that was created. And this was just one example out of infinite possibilities. Whatever industry you're in, Monday Magic will create the right solution for you.
The last thing to note about a business like this is you have a bit of risk if someone like Microsoft or Salesforce comes along, or maybe Atlassian, and they already have huge distribution. And basically the people are already sitting on that software. So let's give them this work management tool and bundle everything in. And that's the same kind of threat that there is to all of SaaS. And that is one risk that we have. The total addressable market is very large. And I think in that kind of scenario, it may be that Monday is more likely to be acquired than actually destroyed. Again, there's not much evidence for them necessarily being destroyed at the moment. And I think this is a huge greenfield opportunity, particularly with the breadth of new customizable tools that are coming out on Monday all the time, and the ability for the consumer. It's not just a software as a service, it's almost like a platform as a service, because the actual customers within Monday.com can tailor their own solutions. So yeah, the last thing I wanted to say is that it seems like the market had a bit of a paddy over Monday.com. Yes, they were not absolutely outstanding earnings, but I went through them with a fine-tooth comb, and there's nothing in there that really destroys the thesis of Monday.com for me. I think it's maybe just a bit of short-termism, or maybe a bit of bore with this on the market. I mean, granted, they were at $300 per share like a month or so before this massive crash. So I wouldn't say that is particularly cheap for Monday.com at all, but at 185, they're trading at 27.5 times next year's free cash flow. And that's with their free cash flow margin going down a little bit as well, because they're doing the reinvestment. And at the same time, they're still growing that top line 26% a year. Very, very good stuff. So it looks like a good risk reward. Let me know your thoughts in the comments, and I look forward to seeing you in the next video.